Let's dive deeper into the action right now.
All right, let's talk to our market reporters. Abigail, what are you watching?
You know, Joe, I'm thinking about the S&P 500. You all are talking about how investors are happy with the Fed's decision. This chart suggests that they may remain happy, maybe even get happier. It's a year-to-date chart of the S&P 500. We've looked at it a couple times over the last week or two. Earlier this year, we see these areas of consolidation that the bulls did take out, the buyers really taking out the sellers above the 50-day moving average. In May, of course, we had that bearish action, so there was an area of congestion that went to the sellers. But ultimately, the buyers have stepped back up in this recent area of congestion into today's meeting. Actually broke to the upside yesterday. You can see, as Sarah was talking about, less than 1% away from the all-time highs. The MACD buy signal is gaining momentum right now. Emma, the S&P 500 is confirmed for about 3060, suggesting that new all-time highs are in fact ahead for the S&P 500 this summer.
Abigail, if you were just watching gold this afternoon, you got a pretty good, clear read on what we learned from the Fed. The yellow metal approached a 14-month high at one point during the session on it, as investors bet that the Fed will cut rates. Two ways, of course, in which this benefits gold. It's a boon for bullion as it doesn't pay interest, and also the fact that the Fed might be considering cutting rates suggests that the economy is getting worse, and that means that if the times are going to get worse, investors will be looking for havens. Gold will welcome them with open arms. Today's move, of course, not in isolation. Gold has posted 4 consecutive weeks of gains as investors have bet that the Fed would make the moves it made today. Luke.
Thanks, Emma. And I'd like to run a little cover for Jerome Powell here. We're questioning that remark that he made, which was essentially risk sentiment in financial markets has deteriorated. Just looking at the S&P 500 wouldn't tell you that. But I think there's some good corroborating evidence. Firstly, we had yesterday's Bank of America survey essentially showing that global growth expectations as well as allocations to equities have fallen. But here's what I'm looking at, and it comes from Max Grinikoff at Macro Risk Advisors. And it's the bottom panel there is what I'd like you to focus on. It's the rolling beta. It's a proxy for exposure, how much global hedge fund performance is moving in line with the S&P 500. Basically, it isn't at all. And this is just another sign that big money investors remain very underinvested in this rally. And Max's upshot from this was, to Abigail's point earlier, that this participating in this chase as you continue to trail the market, Scarlett, is something that could take the S&P 500 higher and potentially eclipse some new records before long.